It is Friday, October 6th. I hope that you had a fantastic week. And I first want to apologize that I've been a bit MIA this week. Honestly, the market, with all the volatility that's been going on, it's just exhausting and hard to keep up with because things are so back and forth. Initially, we started off this week with a couple of days, Monday and Tuesday. They were pretty much just an absolute bloodbath in the market, both the stock market and the bond market. Then Wednesday, we had an ADP report that showed job creation numbers that were significantly less than what the market was expecting. And we had kind of a reversal. Stock market rallied, bond market rallied. Then yesterday, we had initial jobless claims numbers that weren't anything spectacular, but it didn't miss the mark by a whole lot. So the positive momentum in the markets kept moving in the right direction. And then today we had the jobs report that came out showing job creation numbers that were almost double what the market was anticipating. And as you can imagine, initially, based upon the headline numbers in that report, markets did not like that because, of course, that gives the Federal Reserve ammunition to keep basically on their path of Fed funds rate hikes and tightening of monetary policy. And of course, the markets just don't like that. So initially, stocks opened down, mortgage-backed securities up and down 54 points. But as the markets had a chance to digest the information in that report beyond just the headline numbers, such as wage growth, unemployment numbers, things like that, the markets reversed. And stock market is currently up across the board now, with the Dow up 309 points, NASDAQ up 192, and S&P 500 is up 49. Mortgage-backed securities, as I mentioned, did start the day down 54 basis points. And I think at one point in time, we're down as much as 68 basis points. So pretty much giving back everything that we've gained over the last 2 days. But it is also reverse course, still down on the day. I think currently down 33 basis points, but certainly gaining back about half of what we had lost. And hopefully that positive momentum will carry out through the rest of the afternoon. It'd be nice to get back basically to a break-even point where we're still benefiting from what we had gained the last couple of days. With all that said, a lot of information coming out next week. I think we've got the PCE report, which is the Personal Consumer Expenditures report, which is a key measure of inflation that the Federal Reserve looks at very strongly. We also have some other information that certainly could be, market moving. Especially with all the volatility that we've seen as of late. So interest rates, unfortunately, continue to head in the wrong direction. The Freddie Mac published 30 and 15-year rates came out yesterday afternoon. Currently, the 30-year fixed rate on a national level is at 7.49%, and the 15 years currently sitting at 6.78%. I would very much look forward to the day, hopefully sooner than later, where I tell you that rates are back down into the sixes. So keep your fingers crossed, say a prayer. In the meantime, I hope you have a great weekend, and I will see you next week.